Welcome back to my channel. I'm your host Erin, and today I'm going to talk about trading secrets. Okay, some of these things may not be a secret, but some of them maybe you just don't know because you're a newbie. So let's get into it. Keep in mind, I'm not a financial advisor. You must do your own due diligence. With that said, I'm going to continue. Guys, let me tell you something. One major thing about trading is that you need to size up your positions. Okay, don't think, oh, I'm gonna trade a penny stock and buy 50 shares of a penny stock and think that's gonna make money. No, you are competing against people that are buying like 10,000 shares of a penny stock. They're buying maybe 20,000 shares of a penny stock. That is what's called sizing up. Size matters in trading. Yes, it does. The next thing you need to know is that margin is very important. It's actually crucial. If you do not have margin, it is pretty difficult to just trade. So I spent literally the last, I think, 6 years not really trading on margin so much. Okay, so I was trading from a taxable account in cash. Then I had a side margin account, but I would not size up. And now going through everything I've been through, the past, I would say, several months to a year, I changed what I was doing and I started to see a big notice, like a big difference, sorry, a big difference. So you need to absolutely trade on, and I don't want to be the one to say it, guys, because again, I'm not a financial advisor. You just got to look into using margin. Let's just put it that way, okay? Look into using margin because that helps you size up. So I was afraid of using margin in my taxable accounts. I had a margin account, and I still have it with Fidelity. So I have a margin account with Fidelity. My taxable account is not a margin, and I was afraid of putting the taxable account on margin, and I literally tried it like this past, I don't know, guys, like just the past few months, and I was like, what? Everything was phenomenal, guys. But keep in mind, margin is not for everyone. You don't want to be those people blowing up your account because you decided to go and buy 30,000 shares of a penny stock that went down by 10%, and now you're effed over, as they say. So margin is not for everyone. And again, I keep stressing the whole margin call issue. Yeah, a margin call is pretty big, guys. You gotta avoid margin call. It's like you owe money once the stock goes down, because margin is borrowed money, and the bank is going to force you to liquidate your position. You must choose before they do, because once they choose, they it may be a stock you never intended to sell, and they will probably end up selling it. Yeah, so that's why you gotta be careful with margin. The next trading, and this is not a secret, guys, unless you're a newbie, um the next trading secret, again, it's not a secret, is that data matters. Okay, when you get market data, that matters a lot. Okay, because a lot of these institutions have like a big account where they spend about $30,000 a year for market data. Okay, and what do we mean by this? We mean, for example, the Bloomberg terminal. Oh my God, guys. The Bloomberg terminal is $30,000 per year. Okay, unless you work at an institution or you're making, like, I don't know, 100,000 or more consistently, it's difficult for a retail person to get the Bloomberg terminal. Okay, because again, it literally costs $30,000 per year. Okay, So, and when you say this to most people, they're just like, "Oh my god!" Like it's a shock. Like, oh, why I'm not spending that. Are you crazy? Yeah, that is the mother effing king of market data, guys. Okay, there is a second thing that we use, which is called Benzinga. Benzinga is pretty good, guys. It's I think about 200 per month. So I usually use it if I know I'm going to trade full time. If I know I'm going to trade part time, then I don't really use it. Okay, guys. So I'm usually in and out of Benzinga. Okay. The reason being is because I do have a normal job. So when I'm working at my normal job, um, then I don't have my Benzinga subscription when because I'm only trading part time. When it's summertime, I'm trading full time if I'm not traveling. So then in that case, I tend to have a Benzinga account. So it is roughly about $200 per month, if I'm not mistaken. So, and the $200 per month is fine if you're a trader because, depending on how much you make in profit, you're going to easily recoup that $200 market data subscription, okay, that you pay per month. So it's pretty cool, Benziga, just from my personal experience, because so my ex and I, we're both into trading. We call Charlie, the guy that spits out ticker symbols on there, the money making man. He is literally the money making man on Benzinga. You need to have a Benzinga account, guys, like a paid subscription to trading market data. And I have to specify that because there are other Benzinga accounts, but it's Benzinga for news, for regular news, like business news or US news. That's not the same Benzinga we're talking about. We're talking about the other side of that Benzinga. The other side of that Benzinga company is market data. Okay, so yes, they have one for regular news, like if you want to listen to Donald Trump or whatever, what he's doing today, his policies, and the other side of Benzinga is market data, what's trending in the morning, and Charlie. He would just start spitting out ticker symbols like, okay, I don't know, USAR. Don't copy me, guys. That I'm just giving that an example. Okay, USAR is up today because da 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 da. Okay, another one up now is I don't know NVDA da 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 da. He will start speaking ticker symbols. I can't make this up. I used to listen to Charlie spit out ticker symbols while I would take a shower, while I would brush my teeth. I would just let him play, whether it's on my iPad, my phone, my like computer. I would just like brush my teeth and he's spitting out ticker symbols and I'm like, "Oh, what?" And then I would stop in the middle of whatever I'm doing, if it's brushing my teeth or whatever, to go to the screen, check on that particular stock and see if I want to get in it or not. So, like, that's just the other side of the coin, and newbies don't know that. They're competing with, um, like, if these people that have big giant terminals and paid subscriptions and multiple giant screen monitors, and they've got the best top of the top, okay, the best, and you're just trying to outbeat them as a retailer with a I don't know pea shooter, and they've got AK-47s or something else. I don't know, guys. Okay, they've got something else bigger than what you've got. So that's always an issue as a retail trader, and I don't think retail traders realize that they've these institution institution investors, they've got like the Bloomberg account that's $30,000 per year. And retail investors are looking at Yahoo Finance and they're looking at, I don't know, whatever else, whether it's TikTok or YouTube or whatever, and you're just like, okay, but they've got access to data faster, a lot earlier than you do. You can't outbeat the Bloomberg terminal. The next after that is Benzinga, and Benzinga will be shooting up ticker symbols at 5 a.m. 5:30 a.m. Before even some YouTubers are even awake. So, and Charlie, the voice, the guy that does that, he gets paid to wake up early and spit out ticker symbols, So that's another thing you gotta look out for. Um, and then for me, what I've noticed, what is now working for me, which I was truly afraid to do. And I said to myself, okay, I'll run this as an experiment. If it works, I'll keep it. If it doesn't work, then I will disable it. And this is the real secret for me, is that I ended up leveraging practically my whole account. I truly, truly do not recommend that. Truly. That can in itself be so entirely catastrophic. Okay. And once again, I'm going to keep saying this. I'm not a financial advisor. You really, really must do your own due diligence. Okay. Because I'm stressing something that's extremely risky. Extremely. I mean, I gave myself 1 month because I had a feeling that just in case if it does not work out, I don't want to blow up my taxable account, guys. Um, so when you are a full-time trader, to be coded according to the government as a full-time trader to prevent PDT, which is called pattern day trading, you have to have a minimum of $25,000 or more. They may even to make sure say okay, that particular platform, they may say 25,500, maybe 26,000 to be on the safe side. They may not have it written like that, but they may just still put the PDT code in, just in case you dip down under and it goes under 25,000. If it goes under 24,000, then you are not a day trader. You are considered like a part-time trader, um, and you're on PDT. So pattern day trading PDT, you have 3 total trades per week. Okay, total. One in, so pretty much one buy, one sell, one buy, one sell. The last is a buy, but be careful because now you may not be able to sell it because now you're out of trades. Okay, so you have to be aware of that. And it's in a total of a 5 day period, 5 business day period, let's say that. Or rolling, as no, I think it's rolling, guys. Sorry, rolling. So you have to be aware of that. So if you use up your trades, by next week, you'll probably only have one trade left. It will refresh itself over the weekend. So you'll probably only have one trade. And then by maybe Wednesday, you'll have all 3 trades again. So after selling. So you have to keep that in mind. For me, I knew I was taking on the risk of putting my whole taxable account on margin. I was like, oh my God, because my taxable account is pretty much my baby, guys. Okay, it's my baby. I have big names in there. I have Nvidia, I have Tesla, I have Apple. Okay, I used to have a bigger position in Microsoft, and I pretty much didn't like that Microsoft was stagnant for the past 5 years. So I ended up selling most of my Microsoft shares, like pretty much 99% of my Microsoft shares. So, no, I don't really want to liquidate my portfolio at all. If at all costs I can avoid it. So, and that was a huge possibility and a huge risk that I was taking on by leveraging almost the whole account. So, um, and for me, so far, it's working, but again, there's a lot of risk. So part of the margin call that occurred last night is that I'm in, as you guys know, ticker symbol NVDL, and the account. So it went. It that particular position dipped under, and then stocks went down earlier that day while I was at work, And so some of my stocks were losing value because they dipped, of course. And then that particular position, um, I was pretty much, my margin was high in. So now the margin is high, and then things were dipping. I went under a little bit, especially in that position, and then I got margin called. So now, for me, yes, I did put some money in yesterday, but again, it's gonna go in probably Monday business day. Okay, so now in this current position right now, it's dangerous for me because my account, they can literally choose which stock to liquidate. And I'm gonna have a field day. I'm gonna be like, oh my god. That's why I put in money, because I don't want these positions to be liquidated. So when you um, leverage your whole entire portfolio, it's extremely, like, I have to stress it, it's extremely risky. I can actually lose Tesla stock. I can actually lose um, my Nvidia stock. I can actually lose my Apple stock. Essentially, you're putting everything in that portfolio up for sale. Like, in the event that there's a margin call, in the event you lose whatever, the assets you have, the stocks you have in your portfolio, it's theirs. They can do what they want with it. That's why I don't recommend a whole entire portfolio on margin. Okay. Um, and that's why I went through this experiment with, okay, if anything happens or were to happen or about to happen, that I must take the whole entire portfolio off of margin, because I don't want to risk that. So I'm still going through that experiment. So far, for me personally, I cannot speak on anyone else, but for me personally, I'm liking what I'm seeing. But knowing it's extremely risky, guys. Like, you don't want to be in a position where you're waking up like, oh my god. That's why I don't really want to get into a lot of penny stocks, especially while I'm away from the screen, being that I'm back to work at my normal job. So I don't want to be in a position where I'm in a penny stock. Let's say you have 10,000 shares, 20,000 shares of a penny stock, and you're at work, guys. You're at work for 8 hours. You can only check every once, I don't know, an hour. Once every, I don't know, 40 minutes. Anything could happen to that position, and your account will be liquidated. Your whole entire portfolio could be liquidated. This is why it is not recommended. Um, I think only professionals can do it, or those that are brave and willing to take on that risk, and they have a backup plan. So they better have a backup plan. Like, if you lose that money, what you gonna do? Because you cannot be one of those people that are gonna jump off a building because you just lost everything in your portfolio. And you see how quiet I went, right? Because that's what happens. People do lose everything. They mortgage their houses. What do you mean? Like, I'm not doing that. Like, I'm not gonna be one of these people mortgaging things off. I'm not gonna be one of these people that's like, oh, because that's a problem, guys. That sounds like an addiction. Okay, so you don't want to be one of these people, especially, like, I think it was like during COVID time, a few years ago, 5 years ago, or whatever, where people were jumping off buildings because their accounts were getting liquidated during the GameStop craze, like Wall Street bets and the GameStop nonsense, and people were being liquidated and jumping off buildings. Guys, what? That's a crazy headache. Like, I can't. So that means you have to have a backup plan. Um, so yeah. Um, Being that said, although yes, I did pretty much um, put my whole portfolio up on margin, and then just even going back into NVDL, I tried to increase the shares. I increased the shares again. I increased the shares one more time. Upon the third or fourth time, it even gave me a notification. If you continue to do this, your true whole entire portfolio is now up for margin, because again, my portfolio is practically up from margin. It's just at that point where if I do anything else now, it's all full 100% on margins, all up. So I'm literally, my portfolio is about 99% on margin, 99%. So upon the third time trying to buy more NVDL shares, it literally gave me a notification like, do you want to continue this? Because if you continue this, your whole entire 100% of your portfolio is up from margin. And I was like, no, you know what? Let me not even push my luck. So, and I'm glad I did not. You have to know yourself and what is logical, not emotional, logical. So, I'm gonna go through with this experiment. Yes, by doing so, the just putting up most of my portfolio on margin, which again I keep stressing, I don't recommend. I am making more profit, but again, your losses increase like 5 times. Okay, it's like your losses can increase by 3 to 5 times. Your gains can increase maybe by 3 times. It's crazy. So it's very dangerous. For me, like I said, I'm liking what I'm seeing. I am currently at this junction where I'm calling it the financial singularity, because I'm currently at this junction and I had to actually seek advice from my ex, from YouTubers, like just looking at their channels, other YouTubers, where what do you do once you are at that point in your life where the amount you're making in trading is equal to or more than your regular 9 to 5 job. And I literally asked my ex, and my ex was like, well, I didn't want to continue to work a 9 to 5 job, so I left years ago, decades ago. And then I looked at some YouTubers. Some said, okay, yes, they left, they went full-time trading. Others said they are sticking with their regular full-time job and then they're trading part-time. So I'm gonna go with right now. Let me, continue to work full time and then trade part time and see what happens as this experiment, because you don't know if what will happen, guys. Always have a backup plan, because again, trading on this full almost portfolio margin is crazy. Anything can happen. At least if something happens, I still have my regular job. Okay. So I hope you like this information. If you like my channel, please like and subscribe, and I'll catch you next time. Ciao, guys.